In this video, I'm going to be going over structure for a bearish market condition. So typically when a price is trending bearish, you're going to see a series of lower highs and lower lows. So if this was an actual price action chart, let's pretend it is, right? This would be a lower low, assuming that price was previously trending downward before. This would be a lower high. This would be a lower low. This would be a lower high. So when price is in a bearish market condition, typically this is the type of structure that you will see. Lower lows and lower highs. So the most simplest form I could do it, or I can explain to you when price is trending bearish, it's going to be moving from the left hand side of your screen to the bottom right. Along with that, again, it's going to be forming lower lows and lower highs. This is going to be considered a lower high because this high is lower than our previous high. And this is going to be considered a lower low because this low is lower than our previous low. So again, price is forming lower highs and lower lows. So it's really as simple as that. Now, when a bearish market structure is broken, price will either do one or two things. It'll form something like this, or I see one of three things. Right? It'll do something like this, where price made a lower low, then a lower high, then a lower low, then a higher high. Right? Again, this is a higher high because price got higher than our previous high. And again, each time frame has its own trend. So you have to be looking at the market structure for a more reliable time frame, such as the 4-hour or the daily time frame, when it comes to an actual trend reversing overall for the long term, right? So right here would be considered the break of structure. When price breaks structure, we will no longer be looking to short because price has broken our lower low and lower high structure, right? We're going to be looking to change our bias and go long, and looking for how we could take advantage of that opportunity to actually go long. So again, when price breaks structure, price breaks your previous lower high point. So this is one example of what price could do when it is going to change in trend, right? And again, just like in the last video we went over, you have a 3-leg extension. This confirms the bullish trend, right? Another example of what price could do when it is going to reverse is form a double bottom, which again you'll learn later on with actual price action chart what a double bottom is. Right, it's typically a trend reversal pattern. So again, price will form a lower high, then a lower low, or in this case, price will form a low, right, because they're equal, and then price will form a higher high, then a higher low, then a higher high. And then this 3-leg extension here confirms the bullish trend. And again, right, price broke structure after price broke above our previous lower high point, making it a break of structure, almost validating a change in trend here. It is confirmed, a change in trend is confirmed when price does a 3-leg extension where price makes the first higher high, then the first higher low, and at this point you're going to be looking to buy, right? And then price forms a higher high where typically you're going to be looking to close your positions. Now, last but not least, right, another version of a change in trend could look something like this, where price comes down, makes a higher low, then a higher high, then again you have your repetition of higher highs and higher lows in a bullish trend. So we have a lower high, we have a higher low, and we have a higher high. Once price breaks above this lower high point, it is considered a break of structure, and it is no longer in a valid downtrending structure. Again, it becomes a little bit more simple once you start applying this and learning this and looking at the actual chart and practicing your lower highs and lower lows, right? So those are kind of just some of the examples there of the higher highs and higher lows, right? So typically when we're going to be looking to actually trade a trending market, we're going to be looking to sell at each lower high, right? Lower high, we're going to be looking to sell at each lower high. right? We can use this with confluence. I just wanted to go over the basic structure as of right now so you don't get too confused or anything. But we're going to be looking to sell at the lower high, because think about it like this, right? If you sell at a lower low, you're selling at the most quote unquote expensive price, because price can pull back and discount. The bigger the discount is, the less risk you'll have, because again, for the trade to be valid, price cannot break above the previous lower high. So if you position your stop losses up here, right, you have a lot of less room for error compared to when you sell at a lower low, where your room for error is absolutely huge, right? And based off of risk to reward ratios, you'll be able to make back some of the profits you may have lost. So typically a pullback strategy is a strategy where your win rate does take a hit, and it is a little bit more of a harder strategy to trade, but the risk to reward pretty much makes up for all of that. So again, just simple lower highs and lower lows, just simple concepts. Trading is all about simple concepts put together in different situations, right? So in the next video, we're going to kind of dissect this a little bit more and what to kind of look for when it comes to actually selling at each lower high point.